Hey friends, I have a legend on the channel today. Joseph Hogue, CFA, from Let's Talk Money with Joseph. He's a legendary YouTuber with 727,000 subscribers. He's here today. I got to ask him all kinds of questions, many of them inspired from all of you. I have so many questions over the years that have been rolling in on this channel, and I actually took a lot of those questions and asked them of Joseph. And so I'm going to get into that interview in a minute. Before that, I just wanted to share some fun background. Joseph and I both met up at Blossom Social Investor Tour Chicago. It was a legendary day. Early in the day, we did these interviews. I interviewed Joseph. He also interviewed me. It's really awesome because Joseph also did some interviews with Marcos Mia, another awesome YouTuber who covers ETFs. Later in the day, Joseph and I and a bunch of other creators joined the Blossom Social team to actually close the market at Cboe. And so Cboe is the fourth largest exchange in the world. And we got to clap. We got to close the market. It was the experience of a lifetime for me. And I'm so thankful for Cboe and for the Blossom Social team. Later in the day, Joseph and I and a bunch of other creators, Marcos included, we went to the Blossom Social Investor Tour Chicago, and we got to meet up with a bunch of you at home watching right now. And thank you for attending. We all got to speak on panels about investing and our passion for investing. I covered income investing. It was such a day. Such a milestone for me as a YouTuber, for a finance guy, just for someone who loves dividend stocks. And so I want to get into the interview, everyone. This is a great interview. Let's just welcome Joseph to the channel and let's get started. Hey, everyone. I have a really special guest today here with me. This is Joseph Hogue from Let's Talk Money with Joseph. This is an iconic YouTuber that probably everyone here on PPC Ian has seen before. It is an honor of mine to have him here with us today, sharing his knowledge. And what is so amazing about Joseph, when I was looking at his resume, not only is he one of the most prominent YouTubers in finance, but he has the degrees and skills to back it up. He is a CFA. He has an MBA. He served our country in the Marines. It is amazing the resume that Joseph has, the level of experience he brings here to PPC Ian for today. So I'm so glad to have him here today. And a fun fact, he's from Iowa, which is actually oftentimes confused from where I live in Idaho. And so when I tell people out of state, like, where are you from, Ian? And they kind of confuse Iowa and Idaho. So that's just a fun fact there. But honestly, I am so humbled, so honored. Welcome to the channel, Joseph. Thank you for being here today.
Thanks, Ian. And what I always tell people is, Iowa corn, not potatoes. And another way of looking at the resume is just that it took me so long to figure out what I wanted to do. I just kind of bounced around a lot. But it's a great pleasure to be here, and looking forward to the conversation.
Thank you so much, Joseph. And so I think we should just start out with maybe telling the channel here, the subscribers, a little bit about yourself and your investing style and what you're all about in the world of personal finance.
All right. Well, so investing style, I'd say kind of a reformed gambler, right? Because I've made all the mistakes. I think I see myself in a lot of new investors right now, just chasing those meme stocks, those hot stocks, and those get rich ideas in stocks. I was investing back in 1999, which of course was a great year to start investing because I lost it immediately the next year. Lost it again in 2008 because I'm stupid like that and I don't learn. But eventually did learn how investing really works, and I'm pretty proud of it. Was in the Marine Corps up till 2001. Got into commercial real estate, really started as a commercial real estate analyst, made the move into equities and equity analysis. So I did study for the Chartered Financial Analyst exam, kind of the gold standard for analysis, and worked on Wall Street there in New York. We're in Chicago here with the Cboe Global Markets, but worked there in New York for a little bit, and then with venture capital as a venture capital analyst. Decided that that wasn't, the hours weren't for me, and the Bloomberg bump. If you don't know, that's a little bit of Red Bull with some extra stuff in there to get you through those 14-hour days as an analyst. Decided it wasn't for me, and I went to freelance analysis and started my own blogs. I started here on YouTube in 2017, and I just loved it. I love the I love the back and forth and the face-to-face relationship we get with regular Main Street investors here on YouTube. Something I could never do as an analyst. Analyzing stocks for the ultra rich and people there.
Well, that's a fascinating background, Joseph. And would you say today, for your personal investing style, are you investing in stocks, ETFs, real estate, a little bit of all of the above?
So I really like the core satellite strategy, and that means you do own pretty much everything, and as well as maybe a little bit of upside opportunity. So what that is in the core satellite strategy, you take 60-70% of your money and you put it in maybe 5 or 6 ETFs, right? So that is $60 out of every 100, $600 out of every 1,000 you have invested, and you've got it in these broad-based ETFs. Those are index funds, so maybe the SPY for stocks, maybe the VNQ for real estate. So you've got stocks, real estate, you've got bonds, maybe the BND fund for bond exposure, and then maybe some of those theme ETFs as well. So ETFs that hold stocks like in the technology sector, the AI sector, maybe the AIQ, which is the artificial intelligence sector. What that does is, even if you screw up completely the rest of your investing, your individual stocks, you always know you're going to come back and you're going to have gotten that market return, that strong, stable return out of most of your money, the 60-70% of your money. Okay. Then if it's something you want to do, by all means, you have all your money in ETFs and not even have to worry about it. Go fishing with your kids, have fun. But if you want to pick stocks, if you want that higher upside return, if you want that potential to beat the market, then you take that other 30% of your money and you invest in those individual stocks. So that's where I get to kind of use my skills as an analyst and look into individual stocks, pick the ones I think are going to outperform, beat the market, and really get a little bit bump onto the returns for the rest of my portfolio.
I really like that, Joseph, because here on PPC Ian, one of the things we talk about a lot is kind of my journey. And I'm a little bit of a more conservative investor these days. I like to sleep well at night. And I like that concept you just shared of core and satellite, because it really dives into that strategy of being able to sleep well at night with such broad diversification while still choosing and selecting individual stocks. Speaking of just individual stocks, this is a channel about dividend investing and investing for income through dividend, high quality stocks. Are there any particular stocks you like these days, or ETFs even for that matter, that pay dividends?
Sure. Well, for ETFs, I do like the JEPI and the JEPQ. Those are two JP Morgan funds, use covered call strategy. So basically what you're getting is you're getting a basket of stocks, so a handful of stocks, and then they sell call options against those to produce a little bit higher income, right? And the income yield tends to be between 8 to 12% of those, so the dividend. And unlike a lot of other high income ETFs, they don't see a lot of the price destruction on those. Okay, so if you look at the price chart, the price doesn't go down like a rock like some of these others. It's not going to go up. It's not going to create that much long-term return on your investment, but you're going to get a little bit higher dividend yield. So I like those. I like, as far as individual stocks, I do like the real estate space right now. Maybe it just goes back to my start as a real estate analyst, but within the AI stock theme, we're seeing a big demand or big supply constraint for networking stocks, right? And I think that carries over into the networking infrastructure, the entire networking infrastructure, like the cell tower stocks, right? So you've got American Tower, AMT. You've got stocks like CCI, both of those paying 3.7%, 4.5% dividend yields for those. It's a great hedge against inflation, as well as kind of an upside theme or an upside kicker on that AI theme. So two stocks I really like, dividend stocks right now.
I think that's really interesting, Joseph, because sometimes as we invest in dividend stocks, it kind of feels like, hey, are we getting enough exposure to the new trends, the technology trends, the AI trends? But I thought that's very fascinating with the data centers and with the cell towers in the REIT space. It may be one of those kind of related categories that can give income-oriented investors income right away, but also exposure over time to those growth trends in AI and in networking. That's really cool. Now, Joseph, one thing that I wanted to ask you is you're a parent, and so you've got kids, and you're probably thinking a lot about your own investing for your family, but also for the future. And I get a lot of questions on the channel we have a lot of families that watch this channel, sometimes even parents with their kids or with their spouse, their whole family. I'd be curious, what kind of strategies or suggestions might you have, not only for parents investing for the future for their family, but also parents who are trying to get their kids interested in investing and starting to learn about investing, maybe even buying some stocks or ETFs for them, getting them started. How have you been through that journey in your own family?
Sure, it's so important too, because we all know that personal finance isn't taught in schools, and so it needs to start at home, and it better well start with you, okay? Otherwise, your kids are going to go to YouTube, they're going to go to TikTok and get some of this bad investing advice, this bad personal finance advice. So you really need to get out in front of it, and one, just teach them what investing is about, okay? It's not about picking stocks. It's not about beating the market. I know you can get the misunderstanding by watching YouTubers and even channels like ours, where we're always having to pick stocks. We're always having to analyze the market and really stay on top of it. That's our job, to really be on top of the market and give you that kind of analysis. But investing is really about your goals, okay? Taking what we say about certain stocks, about the market in general, and how that fits with your goals, your needs, and where you want to be, okay? So really instilling that into your kids before they start watching, their own investing videos and things like that. On investing in particular stocks, teach them what investing really is as far as owning a company, being a part of a company. Get them excited about owning shares of Disney or owning shares of Mattel or Hasbro, right? My son owns shares of Roblox because he is on that thing 24/7, right? So he's excited about owning a piece of that company. And I think once they get that mindset that, owning stocks is about owning the company and companies that they know are quality names and good stocks, then it keeps them from getting out of that mindset of trading in and out of their stocks, right? A mindset that hurts so many investors out there, so really get them that idea that, hey, you buy the stock because you love the company and you think it's going to do really well, and you hold it and you just enjoy the ride long term.
That's some great information, Joseph. Thank you so much. And one of the things that we were actually speaking, we're here in CBOE in Chicago. We were just speaking before this little interview about our strategies. And one of the things that I learned is that Joseph has experience with covered calls. And so those of you who have been watching my channel a long time, I buy and hold forever. I'm a little bit scared of doing covered calls because I don't want my stock to get called away, because I feel like, hey, I put a covered call and I'm going to lose these shares that I wanted to hold forever. But obviously, it's important to really look at different strategies out there and have different perspectives. I get questions from people all the time in the comments, Ian, why don't you write covered calls on that? What are you doing about covered calls? And honestly, it's not my area of expertise. And so I usually don't have a very good answer for those asking those questions. But I think today I might have a good answer because Joseph has some expertise in this area. And he was discussing how covered calls, they play a role on the team. They play a kind of a role in the portfolio strategy. And so I'd just be curious, Joseph, could you explain to the audience today what covered calls are all about and how they might play a role in someone's portfolio who invests in dividend growth stocks or even just equities in general?
Sure. Well, covered calls a great strategy, a tool to use for not only cash flowing, getting an extra cash flow boost on your dividend stocks, but even cash flowing companies that don't pay a dividend, right? You've got a lot of stocks out there, stocks maybe you want to own, don't pay a dividend. You can actually create a dividend with the covered call strategy, be able to get that upside growth on the stock as well as the dividend cash flow. But it's very important to understand how these two sides of this strategy works, some of the downsides, the risks to that before you just jump right in, right? Okay, so covered call strategy is where you own a stock and you sell a call option against it. Now, a call option is basically a contract between you and another investor. It's set up through a broker, so you don't have to actually go out and find that other investor. You just sell the covered call at a price in the market. Somebody else buys it, so you are setting up a contract to sell that stock for a certain price called the strike price, to the other investor over a certain period of time, right? So, for example, if I own shares of the SP, or we'll take it an NVIDIA, right? If I own shares of NVIDIA, I don't know where it's trading at right now, $300-400, probably $1,000 by the time this video gets out there. So if NVIDIA is selling for $500 right now in the market, I can sell, and it's October. If I want to take a little bit of risk off the table, if I want to create a little bit of cash income from that, I can sell a call option that expires in maybe January. You can do call options that expire in a week, a day, sometimes even a month, but I like to use a little bit longer term ones. Call option that expires in January for $600, the $600 strike price, right? So that means that if this other investor buys that option from me, they can buy my shares of NVIDIA for $600, that strike price. Buy those shares for $600 from now until January. For that contract, they're going to pay me something right now, right? That is the premium. That's what I collect, okay? So they're going to pay me maybe $50, okay? So I can collect $50 on my shares of NVIDIA. I still hold the shares of NVIDIA. If they go up to $600, that investor is going to buy them, from me for that price. I keep the $50. I get the extra $100 on my shares, and they get the stock. If the stock stays under $600, I'm going to keep the $50 premium. I'm going to keep the money they paid me, and I'm going to keep the stock. So there's a lot of room for return on this, a lot of room for cash upside, but there is that kind of capped upside as well. If the stock goes to $1,000 again, if the stock doubles over the next few months, then I'm kind of screwed because I just sold them the right to buy it from me for $600. They're going to buy it from me for $600. I get that extra $100 upside. I keep the $50, but I missed out on from $600 to $1,000. So there are risks to those strategies. What I like using the covered call strategy for, and I know this is a lot of jargon, folks, please maybe watch this part of the video a couple of times, really understand what these are doing, because they are great tools to use, but they are a little bit more complicated than just buying and holding a stock. But what I like to do is once I've bought a stock, I watch it go up. I have a price that I think that stock is fairly valued at. Maybe it's become a very big part of my portfolio. Maybe if I was in NVIDIA, it's gone up 1,300% over the last 5 years. Maybe it is too big within my portfolio. It's 20, 30% of my money right now. I don't want that risk. I don't want the risk that NVIDIA comes back down, okay? So I'll take a little bit of that risk off the table. Sell that covered call. I'll collect that $50 a share, maybe a 10%, of that. That lowers my cost on that, basically, another $50, right? So that lowers my risk in that stock. And I still have a little bit of upside over the next few months, okay? So it's a great way to kind of lower your risk in a stock, great way to cash flow, get a little bit extra dividend on some of your stocks. Just understand where the risks are and how you want to use it.
I really appreciate that, Joseph, because again, I don't use covered calls right now, but I think it's really important. Anyone watching today, there's no one right way of investing. There's so many different strategies that can work really well. And even in this world of income investing and cash flow investing, there are unique and different strategies that I might not use that may make sense for you. And so I'm so happy to have Joseph here today to share those insights with all of you about how he uses and looks at covered calls in his own situation. So really cool stuff. And I wanted to talk about actually a little bit of a controversial ETF. So, and dividend investing in general. So obviously over the last year, dividend investing, dividend growth investing, it seems like it's becoming a little bit of a lost art. It's not in the spotlight right now. And I think a barometer for that might be SCHD, which is an ETF that I personally own. In terms of full disclosure, I like this ETF. I've been accumulating it this year, and I'm accumulating it because it is out of favor, because the underlying equities it owns, they have not been appreciating as well. They are reconstituted with a lot of energy focus in in this ETF. And so I wanted to ask Joseph not only if he has thoughts today on SCHD, but more than that, like how you deal with investing when something you own or something you're looking at, it might be out of favor, and maybe you even hold something and the whole world is telling you, hey, don't hold that anymore. It's not good. It's no good. It's out of favor. It's not going anywhere. Like, how do you look at things maybe as a contrarian investor and kind of stay the course and focus on where your analysis and your heart tells you to be with your own investing?
Sure, great question. And I promise to make this answer much shorter than the last one. My God, my man does just not shut up. I can ramble. But no, it's an important question because, yeah, you see trading data from the NYSE and the New York Stock Exchange, and most investors, the average holding period is 4 months for a stock. Okay, investors just love to trade in and out of their stocks, and I think a lot of it is because they don't have the confidence in their analysis or in their stocks. They jump on, they turn on CNBC or they jump on YouTube, get a few stock picks. They know nothing about the stock. And then when it falls 3 or 5%, then they freak out because they don't really know why they bought it anyway. And that's another great example of when that core satellite strategy comes in. Because if you only have 20 or 30% of your money in individual stocks, it's going to limit you to maybe 10 to 20 stocks. Okay, and within those stocks, you can really get a feel for what these companies do, why they are the best of breed in their industry and within their themes. So it gives you much more confidence to be able to hold on to those stocks. Okay. Very important. No, not just the individual stocks, but the ETFs. How those ETFs work. Okay, for the SCHD, made a very good point that it's just how this ETF is set up. Okay, if you look how it's set up with the Dow, with a Dow index, it is just very energy focused. It is very transports focused. It's not the growth stocks that have taken off. Okay, energy stocks have lagged because the price of oil has pretty much stagnated around $60 to $70 a barrel. It is an energy renaissance, but that drill baby drill mentality is keeping the price of oil down and it is keeping the margins low for a lot of these companies. That doesn't mean that it can't be a great investment. Okay, the SCHD, I think it's something like a 3.5% dividend, 5% annualized dividend growth, so it is extremely stable. These stocks aren't going away; they are core and consistent dividend payers and cash flow payers. So it is something that you just have to know what the strategy is and what the stocks are in those ETFs, and you have to have the confidence to know that eventually they're going to rebound. So I like what you said, to have that valuation focused parts of your portfolio that aren't doing so well, that are selling off. You go in there, and those are the ones you buy more. Those are the ones you allocate more of your money in, because with that confidence, those are going to be up, and your patience is going to be rewarded.
And I think that's the key word, is confidence. When you're investing and you pick, whether it's an ETF or a stock, to remain confident in your decision. And the way that you build confidence is through doing your own analysis. And as Joseph said, understanding, how does the ETF work? When does it reconstitute? How does the algorithm work behind that ETF? Or when you're looking at a stock, analyzing a stock, how does the company make money? What are the key levers behind that company? How do the financial statements look? Because the most important thing in investing these days, especially with the high turnover rate with a lot of investors and just the bombardment of news stories by the media that might scare or spook an investor, is to have that confidence, as Joseph said. And the only way you're going to build that up is by doing your own research and spending a lot of time understanding the details. I only have a few more questions. One I wanted to ask of you, Joseph, is right now, 2025. It seems in general that the stocks that a lot of us like to invest in, not all of them, there's always spots of opportunity, but a lot of them are expensive. And you and I, we have the luxury. We started investing a while ago, and sure, we've learned through trial and error and been through many different cycles, and we've had our fair share of setbacks and successes as well. But the compounding machine has really worked in our favor because we've been in this a long time. But for someone tuning in today who's newer to investing, starting out right now in this bull market where it's interesting, the dollar seems to be devaluing a little. You're seeing equities almost as a hedge against that in some ways, and it might be pushing values to a new level. Just any thoughts for someone starting out right now with dividend investing, income investing, or just investing in general?
Sure. Well, one is just not to try to time the market. Okay. Chair Powell, chairman of the Federal Reserve, spooked the markets a few weeks ago, saying that stocks are fairly highly valued. And of course, everybody flashed back to when Greenspan said almost the exact same thing, but more poetically, with irrational exuberance back in 1996, right? And whether we're in a bubble and we're going to have this gigantic crash like we did back there in 2000. But if you look back, if you carry that analogy on, if you had sold out in 1996 when the chair said that stocks were overvalued, you would have missed out on like 400% return from there to the peak of the bubble. And then ironically, you would have had to time the market perfectly, get in at the very low in 2002. I mean, the rock bottom low, to buy in at that point, just to buy in at almost the exact same price that you would have sold out on in 1996. So extremely difficult, almost impossible just to time these markets. Now that said, stocks are historically expensive, right? We have a consumer that is very, very weak here with the what they're calling the jobless expansion, right? Weak employment. What I can say is that weak jobs market is probably going to hold back wage growth, so it's going to fight inflation a little bit for the Fed. Fed is going to be able to cut interest rates, so that's going to be supportive of corporate earnings, profit margins, things like that. So stocks are expensive, but stocks do not fall just because they're expensive. They need a catalyst, okay? And we just don't see that kind of a catalyst here over the next 5 or 6 months or even a year. So what you want to do is, again, back to that point of investing is not about picking stocks and constantly beating the market. Investing is about your goals. It's about you. Okay. So if you've made a lot of money over the past few years in this bull market, then you have to think, okay, I think this bull market can keep on going, but do I need it to? What kind of a return do I need, and where am I at right now? And if your answer is, I can play it safe and still hit my goals, then maybe you do want to dial back the stocks a little bit, put a little bit more in bonds, put a little bit more in real estate. Real estate, great hedge against dollar destruction, against inflation. Maybe you invest a little bit more in those real estate investment trusts, like the AMT, like the CCI, like some of the data center stocks, even the DLR or Equinix. You get some of those. You get maybe some gold. So you dial back the risk a little bit. Okay. If you're a newer investor and you haven't benefited from that historic bull market, then I think you can still reach for some of that growth in some of these growth stocks, and maybe use the covered call strategy eventually to take a little bit of a risk off the table. But again, just do not try to time the market. Just be investing. Invest regularly. One of the best things you can do is just invest each month. That way, you're always going to get the highs, but you're also going to be able to buy in at the lows as well. So invest regularly. Keep watching the channels to get some of those ideas and understand how that works into your investing plan.
Those are some fabulous insights, Joseph. Really appreciate it. And I especially liked your comment about how if you're watching today, we're all in unique situations. And so it's going to be very personal for each individual investor what they choose to do, but absolutely not timing the market, having a long-term focus. I love these comments on real estate as well, because that's been a sector that's been a little bit out of favor in general, the REITs, due to higher interest rates over the last few years. And so with interest rates possibly coming down, it's a sector that piques my personal interest. And I guess, Joseph, I just want to thank you for being here today for the PPC Ian audience. This really means the world. It's an honor of an experience. It's humbling to have someone so successful on YouTube and beyond here on the channel today. And so just a few closing things. One, I wanted just to mention, of course, in the description below, I have all the disclosures, disclaimers, but none of the discussion today is investment advice. We're just sharing our journeys here on YouTube for fun and entertainment. And please consult a licensed financial advisor if you're making any kind of financial moves in the stock market or with your personal finances. But what I do want to ask Joseph is a closing thread here is, obviously, everyone knows Let's Talk Money with Joseph Hogue, but and I will include that in the pinned comment in the description below on all my social media. But also, are there any recent videos on your channel you'd like any of the investors here on PPC Ian to take a look at? Maybe something that talks about covered calls, or something that talks about long-term investing strategies, ETFs?
Sure. Actually, it's one that I'm planning on posting this next week. So I imagine by the time this one comes out, it'll be out, and I'll send you the link. But it is really almost an epiphany that I've had talking with people here at this Blossom Tour, talking to some of the investors that have come to see me, and the idea that, this is not investing. I'm sorry, but what you see here on YouTube, on CNBC, that stock picking, the trying to constantly beat the market, finding new stocks, that is not investing. It's our job. It's our passion. We love to do it. And it is a part of investing. It's what you need to really get that idea and that advice and that analysis on different stocks and the market. But investing is where you come in. Your goals, what you need, and how you take the advice that you get here on YouTube or on CNBC or wherever you get your investing advice. and how you use that to meet your goals. Okay, so I'll send you that link. Watch that. It's gonna give you a 5-step plan on taking what you see on YouTube, on CNBC, putting that into an investing strategy of your own, and really taking back control of your money and making your money work for you.
Mm-hmm. Oh, this is amazing. I can't wait to see this video. And this really resonates with me because we are all on our individual journeys and we share our journeys here on YouTube. But ultimately, for anyone watching, it's the best thing you could possibly do is check out all the YouTube channels, all of the different sources of information, and then form your own opinion, your own strategy, and stick with it. So I'm definitely going to share that video when I post this video and across all my socials. As well. There's probably a world of information and helpful tips in that video. So thank you, Joseph, again for being here today. Thank you, everyone, for watching. And we're here live at Cboe in Chicago. And so what an event. And one last thing I just want to say is being at events like this has really been life-changing for me. I get to meet so many of these people I've known only through YouTube here in person now. And this is a community. And so use the community, look at the comments, look at all of the different channels to your benefit to just learn and absorb as much information as you can. Thank you, Joseph, for being here. You're a legend in the space. I truly appreciate it.
Thanks, Ian.
Wow, everyone. What an interview. I hope you enjoyed that as much as I did. I had so much fun conducting the interview and then watching it again a few times here at home. Thank you, Joseph Hogue, CFA, Let's Talk Money with Joseph, for being on my channel, PPC Ian, and providing all of that knowledge. And I'm going to link to Joseph's channel in the pinned comment below and in the description. Also, I will link to that video that he referenced. I suggest heading over to his channel. There are so many great videos, and consider subscribing as well. Also, I want to share with all of you Blossom Social Investor Tours, Toronto and Chicago, life-changing for me. Aside from YouTube, Blossom Social now is my second largest social media platform. I have over 45,000 followers there on Blossom. Thank you for joining me on Blossom. If you want to join me on Blossom, it's free to get started, and I will include my link, my affiliate link, in the pinned comment below. In terms of full disclosure, I'm an affiliate of Blossom. It's free to get started there, but I am compensated when you sign up through my link. All right, everyone. So really great video today. If you enjoyed the video, please click that like button. It means the world to me and to Joseph as well. And also, if you enjoyed the video, please consider subscribing to my channel. It means the world. Before I go today, in terms of a full disclosure, I own SCHD. Also, I am long Blossom. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. Before you invest, please consult your licensed investment advisor. It's possible to lose money in the stock market. I'm just sharing my journey for fun and entertainment. And the same applies to Joseph. He's just here sharing his information and journey for fun and entertainment. I have all my disclosures, disclaimers in the description below. As always, thank you for being here. It means the world. I can't wait to see you in the comments below. Head on over to Joseph's channel for more great content. I'll see you all in the next dividend stock investing video.